Hello and welcome everybody to the stream where we talk about everything to do with the markets ahead of the big open. It's Monday and we all know what that time is. It's time for inflation data week. What's it going to bring us? Well, it looks like it might bring us a little bit of new highs before possibly some new lows later on. Just a quick announcement. Obviously, we have hit 100,000 thanks to so many people in the community and really appreciate that. I'm going to order that plaque at some point, so that'll be amazing. Thank you very much for it. And we are doing a giveaway, so if you haven't entered, your time to do so is now. I've got it pinned in the comment section. Now, the good news and the bad news. I'll give you the bad news. Unfortunately, some sneaky peeps out there have been, let's say doing a few submissions, which is okay, but I'll need to clean it up. So what that will mean is I'll draw the prizes tomorrow during the video, and obviously I'll have it on the screen, and I'll have to just clean it up before I draw it, because there's a certain individuals that have thought, oh, I'll just enter maybe quite a few times. So anyway, we'll fix that. All good. But if you do want to get into it, we're giving away one of each of our courses, obviously including the mentoring. So if you're interested, you jump on over, just fill in the very quick thing, and you go in the prize to win or the draw to win, and we'll draw it tomorrow. So yes, for anyone that wished it was today, it will be in the video tomorrow, my Tuesday, Monday evening in the US. So here we are coming into the market open. We've got a fairly bullish looking open. We're going to do some comparisons to the stock market later on, the S&P, obviously where it closed, where it's opening right now in the futures. We'll be talking about so much to do with the metals markets today, to do with bonds, where we think yields are going, whether we've hit peak inflation, and obviously we'll go into currencies as well. Look at a little bit to do with the US dollar, how strong it's been, gold, cryptos, everything else. So there's a lot to discuss. It's been a kind of risk on recently. We've been following this trend pretty much since the lows. Everything kind of changed down here, obviously. We went from being way too bearish to a bit of a switch. Some nice bullish action in recent weeks. Is that going to continue? Well, we saw a stat that I'm going to just quickly go through today, which is the 50% fib retracement stat from the high. And what we've seen in past history, and I'll just show you what I'm talking about there, it's basically a market that goes from the top all the way down. And if it ever retraces 50% of that move, so all the way back to this, once it goes past that point, throughout 70 years of history, that has meant that the low was in. Now, a lot of you will disagree with this. Obviously, it's only one stat point. We could make arguments this time's different. Every time's different, of course. But it's an interesting stat nonetheless. And obviously, we have breadth. We have all these other reasons why we should be feeling like maybe the market is better than some suspect. I'm sure many people down here were looking at it as a potential advantageous kind of area. If you didn't get area and you didn't get the prices you wanted, well, that's okay as well, because we come from the idea of abundance here on this channel. There's always another opportunity, and I wouldn't be too concerned. I still think there will be, regardless of whether the bottom's in or not, there'll still be a pullback. Because remember, one thing that we've left behind all the way through this run so far has been a series of gaps. And it's just been like gaps down here. They're everywhere. Let's actually bring up a dual screen here, and we'll load the SPX up. And we'll just have a look at how many gaps, in essence, we've left behind. So we'll get rid of these double fib overlays, but we will talk about that soon. And we'll just go over here, and we'll look at some of these. So we've got obviously a massive gap left behind. That means there's standing or potential standing orders here. We've got gap here. We've got gaps, I believe, that are in some of the areas in here. We've obviously got a little miniature one potentially in there, and the list goes on. There's a few. Let's just say there's a couple. Could be one today as well. 41.45 previous close at the moment of the time of this recording, 41.68. So most likely, whatever rally we get in the morning should be met by some pull down to get that kind of potential gap closed, and then possibly we keep rallying. Be careful for the false break to the upside here as well. Maybe this Monday morning exuberance, feeling great about the world, kind of just instantly turns around and comes back down. We'll look at all the possibilities very soon together. So that'll be good. Is the smart money buying? The smart money certainly was purchasing down here. We saw it. We reported on the smart money indicators, but they've been purchasing since over here. What they're doing is they're just basically playing averages. They don't necessarily know where things change. Let's just talk about, would you guys like me to talk about investment philosophy a little bit here for 5-10 minutes? Then we'll get into the trading side. What would you guys like? Someone's got PLTR as a comment like this. What's that telling me? PLTR was, they've announced, haven't they? Ooh, 14.76. Not great. You know what I feel about PLTR. I have no love. I've been hated on many times. Actually, I think last week we were hated on as a community here by a PLTR lover. What do you say? You don't understand. And what do I say? Maybe you don't understand. No, PLTR is an interesting one. I'm not going to say that I understand the business that well. I just go with what gives you the greatest edge. And whatever you understand in trading, when you think about abundance, investment, whatever, it's really about just understanding that there are certain markets that you can gain edge in with certain strategies. There's no one perfect strategy, of course. You will lose, you will win, all of those types of things. But if you think your edge is in recognizing X factor businesses such as PLTR or whatever else, then there's that chance of having a successful strategy. The problem I find is generally at the moment is valuations. Like, how are you truly valuing and how is the business being valued by the market? It's really tough out there. Valuations, I believe that robots are very good nowadays at doing this better than humans. And that's why fundamentals are so hard. I'll show you just a quick kind of example of this just to prove the point. And then we'll go into it kind of is in line with our investment style philosophy. I explained this a little bit with people in mentoring. And one of the ideas here is whether we can actually beat robots at valuations in terms of ratios. So here's a website and here is the Apple ticker, okay? And what you'll notice is that prices quickly shot up to what looked like insane valuations, yeah? But it turns out that the algorithms instantly were pricing in the forward guidance that they were already believing was in the market. In fact, they actually overshot it. And it just so happened that everything came true in terms of the EPS here that the market was already predicting ahead of time. And I think that's because algorithms are just so good at spreadsheeting. Effectively, they're really, really, really good at it. So if you're going to do fundamentals, my belief is a mixture of fundamentals on the base case and X factors is the way that I see a lot of really smart individuals making money. It's the X factor that really takes the big one over here. Oh, it was SoFi. How's SoFi going? Well, PLTR and SoFi, I put them in similar baskets in terms of people get very hyper about them both ways. Try not to have too much bias. That's why I don't trade Microsoft. I love Microsoft, the company, way too much. Therefore, you can't trade it. Well, I can't anyway. I'd just be biased to be like, I like Microsoft. I think it's going up. Today, I think it's going up. Tomorrow, I think every day it's going up, guys. Every day. That's what I'm thinking anyway, my personal opinion. Okay, so let's go over here just to a bit of investment theory. Now, when you're thinking about investment concepts, effectively you're going, okay, well, where is my base case scenario? Where would I like to potentially invest lots of money in? What are my plans? What am I going to do, et cetera, et cetera? So a lot of people will add something like a moving average to their chart. They'll add something like the 200 moving average, which we'll put on here. So we'll just quickly change this to a 200. Don't use a watermark, guys. There we go. So we'll do this to 200. And we'll make this green because I usually make the 200 green for whatever reason. We'll make it nice and thick. So if we go to a weekly 200, it's fair to say that in general, 200 has been a pretty damn good, stopgap kind of investment zone in markets over history. And interestingly enough, we didn't hit that in this case. So an investor will come in and they'll say, okay, how am I going to invest in a market? What am I going to do? Well, a lot of people don't know the standard pullback per year in the US markets between 7 and 9%. So if you were to take the average pullback every year, pretty much the stock market will give you usually one of these between 7 and 9%. So some people will just say, well, between 7 and 9%, potentially, I might place some money into the market. That is a fair, logical concept. And it is also statistical based, of course, there. Then you might say, well, I know a lot of markets sometimes get down close to the 20%. So, of course, we know that a lot of them over time get close to the 20%. If anyone's been following our channel for about a month or two would know I went kind of crazy around this zone. In fact, I was pretty damn bullish off this area here, which was negative 20, because that's where the market effectively entered into bear technical territory. So it's kind of like that 7 to 9%, that 20%. And then after that, you're looking more at moving averages as one of the common kind of concepts. And then, of course, the other common concept is to use technical demand levels or support levels from previous times, e.g. there, e.g. here, or here. So all those three, 1, 2, 3, and potentially 4 would all be pretty good, clear zones. They are logical. They are well thought out. And if you build a plan around that, you really don't feel too much FOMO because you just say, well, if it comes down to this level, I have a plan. You pick your stocks and you go down that line. I think that's what most big investors do. Obviously, there's more things that you can do with that. You can figure out when kind of the market's bottoming, especially if it does the double dip, which most of them do. You can use stats like we're talking about today, where it goes past 50 fib. You can bring in things like the Vixx. You can bring in fear models. You can bring in dumb money versus smart money, which we've been talking about, all sorts of things. But a lot of the time, you can also look at the charts and say, well, where was there previously demand? And often markets will bounce off these zones. So then you go, okay, well, what's the risk reward? Well, maybe your risk here is you think it could go worst case scenario. You want it to be fully invested here or here. Fair enough. That could be very valid. It's still a very significant pull down in markets. So you could say, well, I want to nibble at it here. I want to nibble at it here. And I want to nibble at it here. And remember, yes, we've pulled back, but we're still at a price that many people thought was crazy cheap or whatever back in May. I don't personally think it is crazy cheap. I just think that these are all relevant zones. So the most important thing is having a plan, then sticking to it and being able to implement it. If you have a plan and you can't pull the trigger, well, it wasn't really a very good plan, or you didn't really have the faith in it. You got to take out that bias and that horror kind of feeling. And sometimes the worse the feeling, the better the opportunity. How many people in the chat here have placed a trade, let's say buying for that? Well, it's more of an investment, placed an investment for their portfolio and it felt so bad to do so, yet it turned out to be a better investment for them. Daniel says, all in invest Kramer. Yeah, that's true. The Kramer's copping it right now from everybody. Poor Kramer. So let's do some fibs. Let's overlay some fibs here with the market. And remember, that doesn't mean you just randomly buy any price. You have to have methodology behind every one of these buys. So here's kind of some ideas for the week ahead. There's, of course, a lot of speculation about the 4,200 zone. I'm doing a poll right now on YouTube, and it's coming in pretty interesting. It's coming in at 50%, it looks like, of you are bearish, and then about 30% of you are bullish over the next 6 months, and 20% of you are neutral over the 6 months. So that's the current stat that's coming through on that poll, about 3,500 votes so far. Interesting. So we'll see how that ends up playing out. So here we have some overlays. We've got the 50% fib of the whole move down. That price comes in for anyone that's in their car. A few people have messaged me and saying they're watching the car. 42.26. Eyes on the road, guys. 42.60 for the 61.8. And then, of course, the gap sitting at 42.75. So you start to play with some serious territory when you get into basically this area here. And this is how you kind of draw potentially a bit of a box zone that you're targeting, or you're conceptualizing that this could be weakness. What else do we have going on in this box zone? Well, we also have the downward trend of the previous peak that was formed here and the start of this whole downward trend. This is the S&P 500. This is the no joke. This isn't like the Nasdaq where it can break out and do fancy things and do whatever it feels like. This is the S&P. The S&P tends to give you a lot less false signals than the Nasdaq does. The Nasdaq is like the Wild West. The S&P 500 is it's Marvel. Well, not even Marvel Studios. That's Hollywood blockbusters right here. So we're usually going with consistency and quality if we can. So this is the kind of area that's very valid. And in fact, pretty much any of this area moving forward, you've got to be very careful in, because where is the trap going to be set if they're going to set it? Somewhere right in this zone. We've always speculated that. It started with the 20 moving average, which was sitting around 41.20. And now any of this next kind of couple of percent here becomes very scary, let's say, potential. Like you have to be on the watch out. So I think double fib overlays, all of this stuff kind of pinpoints this zone as being quite a good technical kind of area. Now, what does that mean for us? How do we apply this? Well, let's go back over to the futures for a second here. So we'll go over to the US 500 futures and we'll have a look at this market right now. So let's get rid of these fibs because they're blocking our vision. And let's have a look at the small time frames. Let's go down to the 1 hour. Okay, here we go. So the market at the moment is making a series of higher peaks and higher troughs. We all know it seems to be in a bullish trend. Good. Well, at least we know something. It's in a bullish trend. Until otherwise stated, why would you fight that? And it goes with anything. It might feel wrong, but generally that just means there's more trapping to be done. Sometimes, following the trend, you don't know when that trend's exactly going to end. You can theorize it's happening in this zone, and you can have take profit zones where you're very happy to take your profit off the table. And of course, up here, you should practice probably pretty good risk management should you be getting into this type of market. But I would say that the biggest X factor right now in this market, I don't know why no one's talking about it, is the midterm election years. So we are going in to midterm elections. In fact, August, October, and September, these 3 months, so August, September, October, they are the most volatile we know. Look, here's the data. The most volatile months in midterm election years by the Vixx. Way more than normal. And remember, these are already considered volatile months, being September, August, and October. What, we've just forgotten about it. Is anyone even mentioning it? Anyone that watches normal television? Do you guys actually see this happening? Is anyone even talking about this? Or is it only us here and a few other channels that may be discussing it? We know the sentiment is obviously going towards the bull side. Okay. Positive case for, of course, the market to go down in the future. We know that the Fed result, or the Fed, is now data driven. So every data point being inflation data and everything. Imagine if the data comes out where inflation hasn't topped. I suspect it has. I've been talking crap about that for about a month and a half. So technically I'd like to be correct. But imagine if it hasn't, what a catalyst that would be. If everything else outpaced somehow the energy drop that's gone through. Then, of course, we've got this dumb money versus smart money. We'll come back to that very soon. We'll kind of go through it some more. But yeah, I mean, at this point, we're still going up here. When are the midterms in the US? So I believe it's November is technically the vote. I'm pretty sure. But usually the market likes to react before that. Not a peep about the VIX. Midterms are around the corner. Absolutely. Only bad stuff on TV? Well, usually that's the kind of thing that you do get the I've traded for a while now. Midterm elections, they tend to be the volatile periods. I mean, that's just the history of it. Obviously, you could say this time is different. Well, it's a data stat point that we can still apply to these markets. So 41.70, we've made a new high. We've got 41.40. Let's have a look here at the left-hand side. Let's examine the previous kind of highs that we got. So we went to a 4,201. That was the peak previously before, of course, it made a series of lower highs and then dropped off a cliff. And right now, right here, we're basically just still going up. So there's no reason for us to say this is bearish yet. Where we should be setting alerts, though, this week somewhere down this 40, 80, 40, 90, the defended zone. Even this 4100 now becomes important because when you think about it, while we're going up here, peak, trough, we're leaving orders sitting behind in this area. So when the market, let's say, comes down and closes below those, it effectively extinguishes those and says, okay, time to go down to the next level. So that's when you get that kind of real trend change occurring here in the markets. And it's very important that we distinguish that trend change. Predicting the fall and keep trying to short this market for no apparent reason has probably, unfortunately, stopped some people from making any money through this rally. They've said, oh, I'm going to short here. Ha, 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 I'm right. Oh, I'm wrong. Oh, I'm wrong. Because they haven't waited for the correct break and then the allowance for that to come in, or they've used the wrong instrument. Unfortunately, that's what we do. We tend to just try to preempt stuff. It's better here just to follow the current trend. And for now, the trend is up. Of course, coming into the inflation figure, I wouldn't be surprised at all if the market goes, oh, we're feeling optimistic. We hit some of these key levels, and then maybe the inflation number comes out, and regardless of what that comes out, we go down. We don't know. So we have to just play the stats the best we can, the concepts. Few people talking about volatility. Yep, we'll bring in all the synergies in just a second. So for now, key levels to watch this week, 40.80, 40.90. And then, of course, at this stage, we'll be looking at that 42. What did I have that level on? 42, probably 421, 422. 421, 422, which will be the 50% fib of the entire move. Previous up as well. Bodies, importantly. So very interesting levels here. So we're very close. It's exciting. I think it's exciting because there's opportunity just around the corner. And I would expect the next 3 months leading into the end of the year to be quite volatile. Let's talk about yields. Let's talk about dollar index, and let's talk about Vixx before we get into the rest. So first up, we'll do Vixx. 21.49. Back in the 20s, low 20s. So 21.49, we're back in the low 20s. Obviously, we've seen this play out a few times. We've got February period. We know what happened after that. We've got March period into April. We know what happened after that. And we absolutely know that this was when volatility spiked quite a few times. Basically, we're going back. When we enter underneath 20, we effectively exit bear markets in terms of the way volatility works. Most people consider 20 kind of the barometer between normalized markets and bearish, fear-driven markets. So somewhere around here, you expect, if things are going to happen, for fireworks to begin in markets. Let's actually have a look back at when we hit 20 back in 2020. Notice how important this zone was. And then, of course, more of a stabilization year after that, which was 2021. Few people saying there's a downward trend line you're not drawing on the VIX. I see it. I just don't draw trend lines so much. You're talking about this, and you're probably talking about something else that I'm sure you've got there. But no, I don't really do that. The other one you could do is you could say through the bottom here. So more of a trend line to the way up. I understand they're there. It's just, to me, just simplify it. Let's use the horizontal. We don't need to have these ones so much. But if you want to, you can have them there. And I'm sure you can refine this a little bit more by going in, actually figuring it out correctly and saying, oh, look, it's got the lows on it as well. So then we can go like this, and we could then trap it in here. But what's that really achieving? We already know it's in a box zone. Anywhere here, it could spike. So this is your entry in terms of if you believe the VIX should be spiking, you're getting into that box. That's why we create box zones. If that makes sense. So for the VIX, it's in the zone, very close. Anywhere around here, you could expect some volatility. That's the VIX. A few people asking questions about all sorts of things. We'll get to it as much as we can soon. Dollar index, let's move over to that. So the US dollar, actually, no, we'll do yields first. So let's have a look here at 2-year yields. So we saw the jobs numbers come out of the US. Obviously, it was a pretty strong jobs number, and it led the data-driven Fed. Remember, the Fed is now data-driven. This is what's kind of annoying. And just take a second here to think about what that means. It means that every piece of data suddenly matters more. Because instead of the Fed saying, we're going to kick inflation's ass and karate chop it and do all these sorts of things to it, they're saying, well, we'll check out the data and see what happens. So instead of them just saying, we will do anything it takes, they're now saying we're data dependent, which keeps the market guessing and should create a lot of opportunity for traders and probably a little bit of gray hairs for investors over the next 2 to 3 months. Because depending on how the data subsets look, the market may misinterpret, it may do all sorts of things, which probably is partially what the Fed wants. They want to keep the market guessing. I would say the Fed wants the market low. So they actually don't really want the market to recover, in my opinion. They want the market instead to fall, because the more it falls, the more it kills demand and but not too much. You know, we want to keep it kind of above 3,200-ish. That'd be good. Somewhere around there. You know, we want to make sure that we're not too low, but we're also not too high. So the US 2-year spiked to 3.232, and we saw a bunch of yields. So if we have a look at a bunch of yields, we saw yields basically in December spike to 3.48, which was getting close to that all-time high we saw for the December yield. And we saw April go into 3.65, which puts us back up to July. So the market's saying, okay, well, let's find out what this inflation number is going to do. And if this spikes, if we see yields go higher, we would have to expect the market to come down, because the market's very convinced. It is absolutely convinced about what's going to happen. The market is convinced this is going to occur, and we've been reporting this for a while. Rates go up, rates stabilize, rate get cut mid to late 2023. Now, my opinion on it is we're going to stay inverted for quite some time. So we're going to basically be inverted versus the 10-year. So let's again go back over to the US 2-year, 3.232. I would say the Fed will not try to push past 3.5 points to 4. They will not go past this number in the end. It's highly likely they do not get past 4. Okay? They will instead choose to hold the rate for longer if necessary. At least that's my opinion, and probably the opinion of the market. Instead, what's going to happen is they're going to probably cause whatever the term for recession is now. And instead, the US 10-year rate is actually going to fall substantially. And I wouldn't be surprised to see the US 10-year rate fall in the vicinity. And someone asked before, what are bond traders saying at the moment? Well, bond traders are incredibly bullish on TLT, which means they're incredibly bearish on long duration. So they're basically saying, okay, we believe yields, in fact, a lot of them are reporting that they think the US 10-year is worth sub 2% in terms of what they think fair value is for it. And there are other lead indicators saying very similar things. It's also why gold may be, if you were to pick like asset classes in this unstable time right now, this is not a recommendation under any circumstances, from other people's opinions, as well as, some data that you've been pulling, you would have to say things that are correlated to do with yield on the 10-year falling could be some of the better ones. So some people think that's TLT. Some people think that's gold. Remember, everyone hates gold. I don't hate gold at the moment. I certainly think that gold has got money flow coming into it, and it was oversold. And it should perform quite well in a poor yield environment where 10-year is going down. So that's the general gist. Of course, it's never certain. Nothing is. The market is now data dependent. It will unfortunately mean that every data point is important. It'll mean that the US 2-year and 10-year need to be watched. A few people saying head and shoulders here, absolutely. And a few people are assuming that this means that if the 10-year goes down, that means that the Nasdaq goes up. The Nasdaq will go up, not really based on 10-year correlation. Okay, it won't do that. The Nasdaq will just go up because if the market smells that we've kicked inflation's ass, the Nasdaq, the growth stocks will go first. They always do, and they'll already be going. Which at the moment we're seeing a lot of breadth. We're seeing some strength there. So we'll go over to what this means for the US dollar. So if the 10-year and the 2-year, let's say the market believes this week with inflation that the 2 years hitting its peak, and that we're going to sit around 3.5 to 4%. It would basically it would mean that if these rates drop, e.g. the 2-year drops and the expectation of what the Fed's going to do in the future drops, the US dollar will also drop. Remember, it's its desirability versus cash. So versus other cashes around the world, and also versus growth and other assets. So that means that if the rate is dropping, it's not the reality, it's what the market sees in 6 to 9 months. Always remember that. It's the disparity between reality and what the market's doing. So what we see in these charts always is the same. We see, most as retail traders come in, they say, oh, I read the news, and the news says, oh, Fed increases basis points, 75 basis points. And you think, oh, that means the dollar has to go up. No, completely wrong. It has to be what is the 6 months and 12 months away telling you. So if the 2-year and the 6 months and the 9 months are dropping, then actually what's going to happen is the dollar is going to go down even when the Fed is raising, if that makes sense. It's the forward. It's the same in the stock market. That's why you're seeing already recovery in the Nasdaq, because they're already betting the yield curve. They're betting this. So they're already, the market is already betting 6 to 12 months in the future, saying, well, the probabilities of the Nasdaq bottomed are now sitting somewhere between 50 and 60%. So we better take some risk on. That's what they're doing. And it doesn't mean there's not going to be pullbacks, guys. And it doesn't even mean the low's in. But what it does tell you is that the market's always forward looking. So never consider looking at the here and the now, or you've always got to be in the future. A few of you saying there's some major news coming out. Welcome as well to the 1,270 people joining us. Thanks so much, guys, for joining us today. If you're interested in entering into the prize giveaway, you can do so by just clicking the link, and we'll go from there. Darren, I saw your question before. If you could just message me in Discord, if possible, and I'll answer that as best I can. We've only got a limited amount of time here before this market opens, so I just want to keep going. So basically, we've got the S&P 500. We know where we're at. We're very close to these kind of topping zones. We could already be there, so you've got to be very careful. We've just seen some market fall off here a little bit, so obviously it's dropped slightly, probably coming in line with the gap close. So 41.45, I believe, was the previous close. And that will just basically pull us back in line. Remember, the market doesn't like to leave too many gaps behind. So pulling back is important there. All right, let's continue to go through our story. So we've done so far what our thought process is. So basically, we've done some key levels for the S&P. You can watch that at the start. We've done our thoughts here for, of course, the Vixx, which we expect the Vixx to be a bit spiky around here. This is in our box zone in the area that makes sense. The dollar index should technically fall, should 2-year and 10-year continue to fall. And I would be betting that if I was looking at the dollar index, while it could have a bit of an uptick right now, maybe in the next week or 2 weeks or even month and a half, the general gist should be that the dollar index will weaken past that point. So if I was to say what's going to happen in a year's time, it would be most likely the dollar would be lower than here. Okay. That's the way I'm looking at this market. TLT, interesting one, certainly should do well, should yields continue to drop on the 10-year. And gold at this stage, gold's certainly one of my most bullish cases at the moment. And I'm hoping we get another pullback to allow more money to come into it. But yeah, I don't really want gold going bazooka just yet, because it would be better to do the normal process. And if you have a look at gold here, remember it hit that super critical point down in these lows. Everyone's discounted gold for a long time. Gold is mostly a crap asset and sometimes is a good asset. And I have a suspicion that it's coming into its own at the back end here of 2022. So gold still at resistance. I would like to see this occur either here or here. Prices for everybody, just so you can see it on your chart, 1750, kind of 253, and then the next one will be about 1715. So it'd be nice to see gold kind of go like this, maybe like that, and then boom. That would be a nice accumulation base. But certainly money is coming into gold again at a very fast rate compared to what it has been doing. It's been a horror show. All of 2022 so far, it's just been money just selling, 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 selling. It had that one ramp, and every single week it was just showing horror sells. Well, that has switched as of last week. I think Darren had a question about what are your thoughts about the energy bill and stuff, how it will impact markets. Look, it's probably above my pay grade to really interpret it correctly. As I said, some of this data is difficult to interpret where you'll be correct enough. So therefore, I instead prefer to look at the charts and say, okay, let's analyze them for what they are. Otherwise, it just cloud my judgment. The way that I always make decisions is usually I understand yields. I understand what the market's telling me, and I have some lead indicators, which obviously tell me things about those markets. So somebody asked me before about what are the bonds telling me? Well, they're saying that yields have kind of shown a peaking. They are bonds are way more desired now. In fact, bonds are possibly at their best. I've never said bonds are cheap or bonds are good. But if you were looking at just like the markets right now, the best technical value in the market, which makes no sense because bonds have always been overpriced, could be bonds. And it's very difficult. You have to pick the bond, of course, but bonds actually are cheap in comparison to other asset classes and in comparison to relative bond cost over the last decade, because bonds have been horrible for so long. And in Australia especially, they've been pretty good. Some of them are paying 6.5%. It's not bad. 6.5%. Now, a lot of you mentioning NVIDIA, so we'll have a quick look here. Obviously, something to do with, I guess, NVIDIA's down 7.31%. Pelosi must have gotten out of her call options. 176. The Inflation Reduction Act increases inflation. Yeah, it would probably, isn't it just like, let me just quickly look at this again. So obviously I saw it was passed. I thought it was just like a bunch of cash. But I'm not going to say I really put it in. Bill puts $2,000 on out-of-pocket prescription drug cost, blah, 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 blah. Yeah, look, if anything, I think it's ridiculous. It's absolutely ridiculous. Inflation Reduction Act. I swear to God, I swear that has literally been created just with the name. They just added inflation, so it was politically correct, and everybody was like, "Oh yeah, that's totally going to fix it." Study shows bill will likely have no impact on inflation either way. So it does nothing, most likely. I would tend to agree with that. It's ridiculous. Robbie says, Tom, can you try and answer my question about clean ranges to the left of the chart, like trading only clean and clear ranges? Oh yeah, well you should definitely want to do that. So clean ranges, what you're looking for is things that are obvious or things that have just basically shown themselves to be highly dependable in the past. The only way to really answer the question is to go back over to the S&P 500 and then to use multi-time frame analysis on this. So just for anyone that's joining, NVIDIA is down pretty heavily this morning. So a clean range, you would look at this left-hand side and you would say, okay, let's say we don't know the information. You have to basically say, what is the most obvious kind of areas that the market respected in the past? So that would be clean. There's no way that wouldn't be. That's obviously got Wicks and all sorts of things going on. There's many reasons why I'd like that level quite a lot. then you've got some interesting zones here. And what you're going to want to do is jump up and down through higher timeframes. So you'll need to understand, like, this is a doji on the weekly. That's no joke, okay? That doji on the weekly is no joke. So you might instead go to the middle of the doji, and that will be your range. You've got 2 wicks here. Obviously, that means that there's something that went on very heavily around that zone. So all of these would be your focus areas in the future. And then when you actually bring that across, and again, you've got some really nice area in here, and probably got something before that as well. So these would be your key zones. They're the clearest, especially like these wicks here. This is a very nice one, and down here. And when you extrapolate them across, what you'll find is that the market taps these zones. Is it going to be exact? No. But you'll see it taps into those zones. It taps into those zones. It taps into that zone, and it taps this zone initially. And funnily enough, these are your main areas. And for anyone that kind of says, oh, technical analysis doesn't work, it's some kind of astrology or something. Look, yeah, I mean, you can make cases for a lot of things being random. I mean, you can make a case for anything. But what you're really trying to do here is you're trying to discern where you get edge. Where do you get the highest probability of you being successful? Can you start stacking some other reasons behind these key levels? Might be an idea, you know. Just the level itself is only one aspect to it. I think that's probably true for a lot of places, unfortunately, Christopher, in terms of, yeah. I was reading today, like, supposedly it's getting pretty bad in China as well. You have to like go and protect, you have to go and do a COVID test on every corner at the moment and all sorts of things. So that's another one that not many people are talking about. Shutdowns in Shanghai, shutdowns in major manufacturing areas. That's still a risk to these markets as well. So we're about 15 minutes off the open here. We'll go through everything as we do it, and we'll check out all these markets. So firstly, US 500. As far as we see it, there is all sorts of critical levels moving forward. Grab your fib out, guys. Put Fibonacci on the whole move. Get your 50% fib level, your 61.8 of the last pull. That'll be pretty efficient kind of zoning. And then, of course, you've got that 4,300, 4,276. So basically anywhere from now, you've got to be very, very careful. How many percentage points is this? I'll just get it for you from this point here. Just about 2 to 3%. So 2 to 3%. Now, I tweeted today on Twitter, I tweeted down here that we hadn't quite reached something that's pretty important. So this is the retail traders bought options. So this basically tracks when retail traders are feeling bullish or feeling bearish or with options. Now, in the March kind of up April rally, retail traders bought quite a lot of calls. They were like, yeah, this is going to be fantastic. Look at us. We're so great. And of course, that didn't go so well. This time around, it's in the right trajectory. It is in the right trajectory. But outside of this community, what you're kind of hoping people do is buy a lot of calls and buy them quick. We want to see calls being purchased immediately so we can push down to these type of zones, because the more, it's like the honey trap. It's the honey trap. We want them to, or those finger traps, you know, we want them to put their finger into the trap. Oh, I'm stuck. Yeah, we kind of need that. So we're very close to these zones, but we're not quite there yet. And this could point towards further market movement. Remember, once you get past a 4,200, a lot of people are going to FOMO. If you get to a 4,276 or even a 4,300, people are going to heavily FOMO in trading, okay? If you're an investor, you're buying key levels, thinking about things logically, and you're not FOMO. But people turn trades whenever you start, and I'll ask this to the chat right now. We've got 1,368 people joining us. Thanks so much, guys. When you first started, I'm going to put my hand up. I did this. How many of you turned trades into investments? Who did that? Who did that? I'll say I've done it before. Trade. Oh, it's an investment now. I'm so good. Buy the dip, guys. Buy the dip. So you didn't really have a stop loss. You didn't really have good enough plan, or it went back against you, and you went, this is an investment now. It's not a trade anymore. So that's certainly something that I think a lot of people have done. Let's see what the chat's done this. Bobby said he did it last Friday. Sorry, Bobby, to pick on you, but did it on many times. Did it on ARC. Hold it from profit to loss. Yep. I'm an accidental investor, says Carlos. Yep. And yeah, a few of you have done that one. Yeah. Don't worry, guys. We've all made the mistakes. We've all had some doozies. I've held a stock once when I first started. I held it to some crap penny. I did what everyone does, Look, hey, I'm not infallible. I've made the mistakes. That's why I know you shouldn't do them. So when I first started, I was like, you know what? I like Apple. And I like some Australian companies that I liked at the time. And then I was like, someone gave me the hot tip. And they said, man, you can make like 500% trading the little stocks. I said, oh, really? So I put my little measly money at the time, whatever it was, a couple of grand into the little crap stock. And I thought, I'm going to be a penny stock trader. Look at me. I'm a penny stock trader now. Well, yeah, that didn't go so well. The penny stocks don't go so well. Should have stuck with my Apple. But everyone starts with like usually the top 10, the top 15. You actually start in the right place and you end up in some dark recess of the internet trading weird penny stocks and thinking that's boss. And then you end up coming full circle. I call it the circle of the trader. You start with the blue chip. You go into the mid cap. Oh, I can pick quality stocks. Do well, maybe. You don't want to do well here, but if you do well, I could pick penny stocks. All right, I'm going to have penny stocks. Whoops, I blew my account backwards 5 times and owned bankrupt companies. Well, I'll go back to the mid caps. I did quite well at the mid caps. And then, wait, I'm going back to the blue chips. And then a lot of people just go back to the index. That's the circle of the trader, guys. the circle. The blue chips into the mid caps, into the penny stocks, back into the mid caps, then end up in the blue chips in the index again. You can make. I like this. There's a reason why many of you who would call people boomers, which are actually very smart in some of their investment concepts, they stick in these worlds because they've already done the penny stocks. They just did them during the .com boom. So the penny stock was that was 2000. That was 1998. Into 2000, they lost all their money in here. They've already done that. So that's why now they buy the blue chips in the index and they make good money. It's possible. In the crypto world, it's even more crazy. I'll do the crypto world real quickly here. So the crypto world goes by the Bitcoin, by the ETH, like the Bitcoin, the ETH. And then I don't know why, but there's a gateway Doge. Gateway Doge comes in, maybe some ADA, maybe some, my favorite, some XRP, very popular, that one. I don't know how every single person gets gatewayed into XRP. Got to buy Ripple, man, it's the next bank. I'm telling man, it's backed by the banks. It's going to work. The decentralized exchange. I'm telling you, it's going to work, dude. And then you go down here and then you go, oh, this one has a picture of another dog on it. So then you end up in weird alts. And then if you get really weird, you end up in NFTs. And then you end up losing in those. And then you come back over here, or you just go straight back to Bitcoin ETH. That's probably more of the cycle of the crypto person. Sometimes they get the weird alts and they stop there. But most of the time they go in the NFTs now, and then they come back to BTC and ETH. Don't forget Luna. Oh, well, Luna's over here. That's a subset category. Anyway, we're here to talk about the open, but something like that. I don't know how old XRP always gets everybody. Has everyone here that's in crypto actually owned XRP or been told at some point to own XRP? It is the most infiltration coin. I would almost put it up here, actually. It's an infiltration coin. Sorry if you guys own any of those things, by the way. It's all right. You can make money in them. You just got to be in them at the right time, yeah? 41.62 for the market. So we're going to open a few points above. Let's get ready here. So we've got 8 minutes. Let's do some Nasdaq. I know you guys love the Nasdaq. You love the Nasdaq, even though it's a bit dangerous. And why I say dangerous is it like spiking you out and trapping you around. Everybody loves this one. So we've got the downward trend line, obviously a very valid point. We're at that right now. S&P 500, we're right around the top end resistance, just below that 4,200. We know that the actual real market on S&P 500, I think, didn't get past 41.76 last time. So we're right at those highs. So we're at the first trend line. Now, if we're thinking about what's going on here, we've also got, whoops, I need to get this. We've also got the fib retracement from the last move, which gives us to the 61.8 fib would be 13,600 and let's call it 40, right around that zone. Now, if we go over here to the previous pullbacks, we'll notice that the Nasdaq perfectly hit the 61.8 fib. So again, it kind of gives credence to that little bit of extra bull to convince people that we've smashed through this downward trend line. So it could go here. Absolutely, it could. It could go here for sure. These are both very valid levels. And that's why I would box that kind of zone and say, okay, well, this is an important level for us to be watching. From the perspective of the smaller time frames, let's have a look at actually what the price action is telling us. We'll get rid of this fib now. About 6 minutes till the market opens, guys. So markets are coming back down to get closer to where they closed on the Friday, basically just filling that gap. So far, so good for the Nasdaq. It's been very aggressive. Certainly, a favorite here of most people in the investment side. You guys love the growth. I don't blame you. Totally understand it. It's also the most beaten sector. It's the sector that went down the most. We had Amazon, everything else getting absolutely flogged. And it's one of the sectors that if we are actually coming out of whatever this pullback is, well, I expect it to outperform heavily against, for the first 6 months, heavily outperform the S&P. So do we have any key zones that we know of? Well, we made a peak. We didn't quite make a peak here in the pre-market so far. So it's actually weaker, it looks like, than the S&P at the moment. Could that be NVIDIA? Yeah, it could be semiconductors. So we've gone kind of peak, trough, higher peak, breach, movement back up. Now, this to me, at least on the futures, actually looks weak compared to the SPY. So if you were to say the Nasdaq's leading us, this doesn't actually look like a fantastic chart. In fact, I could see why some people may have just tried to short there. There's more validity behind this because this has already breached one of our major pullbacks. Now, it hasn't gone through the big zone, 12.8. Obviously, that's a 12.8, guys, 12.8. Big zone. So the 12.8 down here is huge. But you can see it's gone up. It's made a new peak. It's come down and said, well, I'm not feeling too bullish through the Friday. And then it's rallied up here, getting close to the highs. And there's kind of like that risk reward payoff where you can say, well, what's the left-hand side telling me? Well, it's not telling me anything good about this so far. It's looking a bit weak. Obviously 13.1s where the buyers could be recommitted today. So you want to put that in. So we'll put in the key levels together. So we'll show the key kind of zones. Got the 13.1. Got kind of where it was and is, I guess. More towards the short side. And then, of course, we've got the bust off high, which should trigger in further buying pressure. But if you were to look at this compared to this SPY, I would say that looks worse than the SPY. No worries, Erwin. Appreciate it. Dieska says, I tried and tried. What did you try? NVIDIA dragging the market? Yeah. I want Nasdaq at 16K again. Fair enough. Josh Slater says, I still feel like there's a drop coming. Well, yeah, I mean, it's valid. We just don't know how many people got quite sucked in. I mean, as we said, we're within a few percentage points here of where the Nasdaq itself looks like it's hit it. the SPY has basically hit one of the key zones. So it's valid. It's just how do you short it if you are going to go for the short? If you're going to go for the short, you have to pick the instrument. I mean, obviously options are expensive, so you need to know how to navigate those. If you short via CFDs, you're going to have to wait for confirmations. If you don't, or you're going to have to pick very key zones where you believe the risk reward is worthwhile. Where do you think CPI will come in at over 9? I would say it comes in underneath the previous one. I think the expectation from, if we go here, from Morgan Stanley is quite a big reduction. So they're saying CPI comes in quite a lot lower. So I think what last time over here in June, we got a 1.3. So they're kind of saying that the countermeasure of energy being down should end up kind of topping us at maybe even a only slightly up rate. So energy's obviously had that big fall in it that's going to take a lot off all the others. So that's the forecast right now. The forecast has, from Morgan Stanley anyway, core services, core goods, and food will outweigh the energy drop. But they're dramatically pulling that CPI down. It's not going to be one quarter, though. See, that's the thing. Even though we all expect this to be correct, even the market does, and that's why it's up, that doesn't mean that that number can come out and the market will just be like, oh, we're going up to the moon. We have to think of ourselves as, what is the market positioning? Has it priced in certain things? Is it positioning this way? So yeah, the Nasdaq does look a little bit weak here today. The SPY, new little bit of high. Obviously, key levels, as we mentioned before, we've got key levels through the 4100 and the 4080, 4090. And if you're a larger term trader, like more higher time frame, this is the big one to me. Here is just kind of like, okay, I'm trying to get it down to the gap fill. And if you're trading here, do I like this open? I mean, this open favors more the shorter than the longer. Would I buy here? Probably not. Would I short here? I'd have a tight stop loss and a very good plan. But yeah, more that Nasdaq probably is the worrying one. The trend itself is still up. So my preference would generally be to see the pullback, to see the turns, and then go towards the buy side overall. But that would require you to be very patient. You probably couldn't trade this open, let's say, if that's what you were trying to do. I personally have a lot of patience because I don't really care. I always have the abundance mindset, come in, look for other trade opportunities, look for other concepts. If I don't see it in the SPY, go over the dollar index. If I don't see it in the dollar index, go over to gold, go over to the currencies, go over to Dow, whatever else needs to be. So ding, 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 we are open. Let's have a look what's going on. We've got 1.33% on the square. Apple opens at 0.71. Amazon up pretty heavily. I think the story of today is NVIDIA, 7.3% down. So a little bit of buying here. I would expect retail to try to buy this. They'll be like, ooh, dip, nice. So I would expect retail to buy that because Slack demand will be pretty heavy. I mean, people have been buying NVIDIA very strongly off the Pelosi, off everything else that's been going on. At this stage, are you on a trend? Not really. You've actually opened up underneath. But I do expect retail to try it. Would I do it? It's not my style, but certainly it's opening down. If you like it for your investment, you're thinking about where am I getting the price from? It's effectively equal to the price of 9th of May and 19th of May, around that area. Meme stocks back. Oh gosh. So we'll just quickly go down to the memes. AMC 2470. So it's interesting that AMC has got 2485 on, actually busting quite high. GME, however, this got a split in it, yeah? This split. So yeah, GME is kind of going as well. And this could be a sign of froth, by the way. This is exactly like this type of thing occurring now is a sign of euphoric optimism. In fact, if you are a bear, you should probably really love seeing that. Let's have a look over here. Exhibit A, guys. GME, 16th of March. Oh, cool. Oh, cool. Yeah. Yeah, we're back, boys and girls. We are back. Whoa. No, we're not. Notice the timing. Coincidence? Probably not. So it's actually a pretty good sign. What's Tesla doing right now? Yeah, good. Tesla up as well. So this is pretty good. I mean, it's pointing towards euphoria coming back into the market and calls coming back in big time. So if they actually allow these floodgates to open, and let's say the rooms and everyone gets all hyper on Tesla and hyper on AMC and GME, it'll be very similar to last time where we saw those nice euphoric runs. My suspicion is that's what's required. SPX going back to its May high. Tesla stock split very soon. That's right. Big gap up on TLT. Yeah, TLT is opening up because yields are down. So both yields are down. US 500, no gap fill at this stage, moving back up. And of course, Nasdaq finding that bid early. So Nasdaq, if it cleans a new high, is a pretty big deal, I think. I think it could be let to be free. Remember, the sellers are going to try to be right where it is right now. They're going to try to sell it with tight stops above and say, you know what? This thing's changed in their opinion on the small time frames. This is where they're going to have a go at selling it. The buyers are going to say, well, we want a new high. And if we can get that, to the moon. And that's when you're going to get that euphoria in. What an interesting thing that we just recognized here. So both AMC and GME had incredible runs, I believe, or at least decent runs back in the March period, which allowed that euphoria to come back into the market. It's exactly what's happening here. Cool. Big gap at 378 on the SPY. I think it's going to go back to that. Thank you as well to the 1,400 people joining us today. It seems like most people are jumping on time on retail stocks today quite a lot. AMC, GME, Tesla. How's NVIDIA gone so far? So it opened up down a bit. NVIDIA now trading only 5.8% down. So it was about 7 and a bit. So about 1 and a bit percent on that straight away. Nasdaq now faltering slightly at around that level. Very, very low. Not much movement at all. If AMC actually gets their short squeeze, I'm going to eat my hat, Finken says. Well, I mean, if we look at the history of what happened last time during that euphoric run in March and April, it happened. Robbie says, why is the ASX so boring? Different type of market. It's made up of 20 to 50 older stocks that move quite slowly. But there's some great trading there still, or great, semi-month trading. Probably less of the day trader, more of the swing. Barrick Gold up 4%. They just reported today. Do love some gold at the moment. Have a look at old Barrick. Yep, coming out of accumulation base. Check that out. So you look at this. Look at that oversold action on these stocks. Barrick Gold trading at March 2020 lows. So from this point, if gold was to rally and Barrick was the choice, let's say, 91% up to here. So clearly they were mismanaging their mines or whatever was going on there. I haven't been covering them that much. Volume, pretty consistent with the drop volume. So it's been pretty consistent here. Can anyone recognize what this pattern might look like? Any trained professionals out there? Christopher says, lol, even Sundial is... Oh, Sundial. I forgot that code. SNDL is going up. Vixx is telling today. Vixx up 2.22. few people saying it's an island. It would have been a cool island, wouldn't it? Like a weekly one if it had gapped fully above here, left the gap here, left the gap here. That'd be sweet. Either way, look, whatever you want to call it, some people call it ugly ass head and shoulders, some people call it double bottom, some people call it Wyckoff accumulation because of the max pain component of it down here. Obviously, you've got that springboard, you're leaving kind of gaps behind. Don't worry about those on stocks. That can happen all over the time. Yeah, this is consistent with what we're talking about in gold, though. See these? I mean, people underrate the gold stocks at the moment. I think they're underrated. Look at this. It's a horrendous looking chart with a decent looking base. In an asset that should do well, should yields actually start to drop in the future. I mean, it's the same price as it was. It's so, but see, this also tells you the other story, guys. Look how terrible gold has been as an investment in stocks if you are in the wrong ones. We are at 1992. 1992. Nasty. So it's all about timing. There's your 2010-11 highs. There's your pre-GFC kind of points. And there's, of course, what we got in August of 2020 with that peak over there when everyone was like, yeah. That was the squeeze period. No, it wasn't. This was I don't think this squeezed. I think silver partially squeezed. Silver stocks at that point. But yeah, it's an interesting base. Certainly makes sense around here for that accumulation. So market's now ramping to a new point. Let's have a look here at the small time frame on the Nasdaq. We'll watch both the Nasdaq here and the S&P. So it's right in that kind of little box high that we put in. Be interesting to see whether we can take that out. And if we get past 13,363, you actually could be seeing a couple of days of extra rally here in these markets, because it's kind of pointing towards, like when we saw that, look at AMC and GME, look at them go. You know, this is the type of thing that gets people hyped, gets them sucked in, goes for a few days, all of a sudden, bam. XBI has been my best swing so far. Yeah, XBI has been pretty good. So for anyone that doesn't know what XBI is, that's the biotech industry. I think some of you, the eagle-eyed people in the community pointed this out. Oh, wow, it wouldn't have been long ago. I feel like it was a month ago. Oh, it was a little bit over. So I think you guys were really slamming it around 21st of June. So yeah, a month and a bit ago, we were hitting that. Obviously, the multi-year lows, the nice level, and it's actually just about to hit the full take, which was the concept at the beginning. Yeah, it's right there, 94 into this 96 range. So you basically hit the 50. Pretty cool level. Nice work. AMC is halted. Makes sense. Hit 20%. Yeah. Is it actually halted though? It seems to be still trading. Or is this delayed? Labu 3x biotech. Oof. Yeah. If you get it right on the right side, you got to be very, very clear with yourself on that one. Labu punish you too. Labu punishment. 93% if you bought the top. And because of, just remember, I want to warn all of you against these 3x funds, by the way. So 3x funds are not perfect mechanisms. To get back here, it will not get back to this price should the price even go back there technically, because there will be a lot of degradation through all of the gappings and stuff that occur. So just remember, the market is not a perfect mechanism in these 3x funds. Can you take a look at NCM on ASX Gold Miners? Oh, new peak, but not off the new peak yet. Certainly a positive sign here early in the session. Market US 500 behind the tech now. Let's see what happens. I mean, high, we'll put the high horizontal so you guys can watch it. There it is. 13,361 on the futures. I'll actually put QQQ on. That made a new peak. So QQQ, the real market, is peaked. There you go. And it looks like there was absolutely no gap there, which is pretty positive as well. NCM ASX is pretty similar. Just looking down here at the daily accumulation kind of block. Again, gold is in that low accumulation zone. SPX broke June high. Let's have a look at it. So SPX through 41.76. 41.80 points towards further ramp, most likely. So that little US 100, if you're looking at the futures, probably just got taken for those tight short ideas. That's why I prefer the SPY. And the S&P has not given us any bearish indication at this stage. SPY broke 415. Yep. Well, SPY is 41.81 now. Well, in terms of the SPX. What's that AMC doing? So AMC and GME, if you are a bear, you want them to fly. I'm not even kidding you. You want them to fly massively. You want every weird stock you've ever thought of to go. Because you have to suck. Remember that idea we thought of before with this very chart. What do you need if you need the market to go down? Lots of calls, guys. We need calls everywhere. Lots of calls. So what's the best way of getting calls back in? Creating or allowing certain hype trains to go. It'd be very interesting to see the polls tomorrow. What's the single biggest drop you've ever seen? It's a great question. I can show you. Would you guys like to see the single greatest drop I've ever seen? It was easily the greatest drop I've ever seen. Nothing ever has come close to it, and I hope nothing ever does. Dollar index diving. Yep. It's down 0.35, not that much. If yields do go down, dollar index should theoretically go down. Is it wheat? No, it's definitely not wheat. So the one that went down the most for me ever was Euro CHF. So if you look at, we'll just use this chart here. If you look at Euro CHF, this was horror show. It's just in terms of raw money, just absolute horrific nature of it. Oh. Phones, yeah, they should know. They don't have the history. Oh, yeah, they do. They have the history. They just don't have much back. So this is the biggest drop I ever saw because of the speed at which it happened. So this was a pegged currency, probably a good lesson for everyone. Do not trade full manipulation. So they had it basically pegged at 1.2, meaning they would not let it fall under 1.2. It's kind of similar to what the Japanese yen's doing at the moment in some ways. So when they lost bazillions of dollars per day, they let it go. And the problem was it was pegged for so long, there was no orders underneath it. So the real story, which is not what this chart shows, was in 5 minutes or less, maybe even 2 minutes realistically, the price went from 1.2 to 46 cents. I remember the print. The print doesn't exist on charts anymore because it's been deleted as supposedly not price. But I'm telling you, it went to 46 cents. So it went from 120 to 46 cents in less than 5 minutes. In fact, I think it was more like 2 minutes because there was no liquidity underneath. So if you want to say what is the single greatest fall I've ever seen, easily this. People got destroyed. Like I know people that lost, they had like 10 or 15 grand or 20 or 30 grand in their accounts. They were negative $300,000. It's in fact what changed a lot of regulation, this particular move. So if you want to ask my biggest move ever, that, and for some reason, the move around first quantitative easing. I just remember it during the GFC when it's in my mind, staying up really late, the quantitative easing. I was like, oh, whoa. Things were moving like 3-4 cents on currencies. This is way bigger, but that one was pretty wild too. That's a bad day. That is a horror show. There was no price, so you wouldn't have got filled. You're slipping 30 cents before fill. The algorithms couldn't handle it because they didn't tell anyone. They're like, goodbye, we're done with this now. See you guys. That's the worst one. I've got some other ones, but that was the worst. A few people saying that the squeezes are falling down. Hey, I'm not saying go and follow the squeezes. I got no interest in the squeezes myself. If you're in them, cool. But what you do theoretically want is you want things getting a little bit crazy now. How's Tesla going now? So Tesla's doing good things, 4.8%. Let's just bring Tesla up here. So general thought process on Tesla, should we go into like a hyperbolic train similar to last time, would be, obviously these are the little box zone key levels that I've got. If we breach to a new high over here, the logical case is actually to get this downward trend. A lot of people won't be able to handle that because that would mean that Tesla literally has come back to a price of 1,060-ish. That would be crazy. So, as in, yeah, just wowzers. What would that give a Tesla trader that got the low if that had happened? 70% gain. Pretty good if it happens. So between here and here, certainly key zones. Probably some profit taking would be around that area, which is 940-ish into 950. If it then goes past, I think a logical conclusion is to crack 1,000 and calls to be opened all over the place. Tokaido says, is AMC a parabolic move? Where can we expect 15 to 25% dumped after? Well, you can expect it, but again, how are you going to trade it? Are you going to use an option? How much is the option going to cost you? Is it even worth the risk reward? The problem with a lot of those moves is often you have to use a dangerous technique to make money out of them, and like good money out of them. And that's just not worth the risk. Sometimes it's better to say it's not worthwhile getting involved. If you don't think you have edge, why do it? You might say, oh, I know AMC is going to be lower in a month's time. Doesn't mean you could trade it. Just because you know something doesn't mean there's a profitable concept there for you. Think about your risk reward. It's like people that just sell like dumps. So I know a few people that were selling in here and they're messaging me every day and they're like, look at me, I'm the best, I'm selling. I'm like, okay, where are you selling? Oh, I sold in the morning, I closed at the end of the day. Well, great. Where's your stop loss? Come on, man, I don't need stop loss. What the hell, I made money. I'm like, all right, did you have a plan? Yeah, I sold at the start of the day and I closed at the end. I'm like, all right. So do you think this is normal? Yeah, man, it's normal. It's normal. Every day is like this, yeah? I'm like, oh my God, you're going to get wrecked. Let's just say they don't message me anymore because they got wrecked because they thought this was the normal expectation. They have no replication. They have no capability of replicating it. You just get owned. It sucks. Replication, guys. Many of you would have different trade systems than I do. I'm sure some of them are successful, but replication is the key. PLTR down 13% today. Nick Keeler, $1. Thank you. Oh, $2. $2. Sorry, Nick. I shortchanged you there. Anyway, can you have a look at Sony? Is it flagging out? Love you. All right, Nick, we'll have a look at Sony. Sony? Thinking about buying those mini discs, eh? Mini disc. Does anyone here not know what mini disc is? It's probably showing my age. Some Discman, Walkman. Is it flagging? It's fair to think that. So bottomed over here in May, similar to a lot of other tech stocks. And we saw a double touch, which is why a lot of people think that also some of these tech stocks have bottomed because of that concept of coming back already for the second low. You can kind of see here. What about cassettes? Yeah, I'm telling you, the AMZN1, which no one will ever know what that is. That was the mini disc player of choice. That was the one. Yeah, this does look like a flag, and it's kind of doing it out of a downward trend concept. So that is strong. Obviously, double bottom. If the rally can continue, that's fairly strong. Big volume after the earnings as well. Look at that spiking. Was the volume different to normal? Probably not until just recently. So a lot of people transacting, but not much movement. Could be a coil. If it was, you'd probably want to break about 87.50 plus, and then at that point. Thank you for the donation. Oh, H. Kelly was very cool. Had the MZ1. Very nice. Ozzy Copper says, I know mini discs. Watch out, you might get into Betamax. Get some Betamax, one of those laser discs. Laser discs of the future. So 41.82 here on the SPY. We've got Nasdaq flying, and it's basically cleaning up the other levels. Target for that would be pretty high, by the way. You're looking kind of taking the leg of the pole. So you would say, take this, and you would extrapolate that out, which should give you the peak, which means it proofs quite well. So that'd give you about that 95. Obviously, it'll be market dependent, but yes, it's a proofing pattern, which is kind of nice. So Nas has made the new high. So the shorters that would have tried to get in on that little area will have just gotten wrecked, which is probably fair enough. And yeah, the trend is still up. New highs here on the previous peak. 50% fib for anyone that's been watching the video, which is technically in 70 years predicted the low was in. Doesn't mean it didn't get a second pullback, by the way. It just meant that the low was in. It sits at this price here, which is 42.30-ish. Everyone's talking BYD. All right, I'll load it up. Is it BYD? This one? Ugh. Is that really it? Surely it's not this. It's like a downward trend, nice consolidation, but I'm assuming that's not the one. Skip protection, anti-shock. Thomas Booblge, Canadian $2.79. Thank you very much. Can you look at Riot? Love the vids. Oh, that's one I haven't heard in a while. Riot blockchain. Really trades more with Bitcoin, I think. Obviously, general crypto sentiment has shifted. Where is old BTC today? 24 plus, I assume. 24.19. Not bad. So that's good for Riot. I've always argued that this is really kind of pointless looking at this chart. And instead, I just look over here. And if these are doing better and I think they're going up, this is just like a proxy for it. I could be wrong, but that's how I look at it. If you go and do daily, it's broken out of a little high here. There's a little gap. It looks bullish. I mean, there's no reason to say it isn't bullish. But I would just go over to Bitcoin more likely and say, well, does this look bullish? When we're making a series of higher lows and higher highs, we have no reason to say this is bearish at this stage. It's come out of breaking the supply that we had over here. It pulled back. It found support. It's come up. And it's trading with the Nasdaq, which at this stage is quite bullish. Mara earnings comes out today. The 7.27 up. I don't know if it's already out or not, but yeah, that's there. AB says, Tom, what happens with Unity? That's correct, Finken. Pretty similar. NOC and BB. Wow, let's have a look at NOC's going. Nope. And BB, Bed Bath. Oh, that's BlackBerry, sorry. 701. So yeah, it's getting a little bit of love. Oh, BlackBerry. Unity. Haven't looked at that one in a while either. That's actually a pretty decent breakout. A lot of hyper stocks coming out of their bases. Like if you look at ARK, any of those things, like let's just load ARK up just for the sake of looking at hyper stocks. You can see all of them kind of coming off their base. Pretty decent basings here for these particular ones, 3.49% on RK. So a lot of people will be looking at these going, yes, DK and G, you can see the base down here. SE starting to come out of its base. Decent company, 88 bucks. Taking all of that gain off. Solar, you can see that's flying at the moment. ARCG, obviously biotech's doing better than the genomic space. PLTR still in the doldrums. Let's have a look at SoFi. How's SoFi going? 4.4%. So SoFi actually had a good little number there, getting that $8 out. Kind of sitting around resistance at this stage. Snap is waking up. That POS, says Kevin. Yeah, Snap, my God. Nah, no Snap. TikTok eats them alive. TikTok eats all the social medias alive, except for probably YouTube. I think even Twitch is dying a little bit. Facebook's not growing much. Twitter is Twitter. Pinterest, whatever. That's kind of cool, but still. Finken says, I'm hearing all the old names. Yeah, it takes me back about 6 months. I think the last time anyone mentioned Mara or Riot seems to be a while ago. Shake Meister, $2. Thank you very much, Shake Meister. Tom, can you look at GNUS? Looking real juicy. Really juicy. Genius Brands, I assume. Yeah, I can see your reasoning straight away for it. Let's have a look at the higher time frames. So, whoa. Damn, that thing had I forgot about that. That was a big run. Genius Brands International. I'm sure we've done it before, but I can't remember it. So here's the resistance little to Wicks kind of coming into there. Probably want it to get above that zone. So 93 should move to hopefully about $1.14. Looks pretty strong. Again, it's in line really just with the rest of the market. If the market keeps bulling, which I suspect it probably has to suck in more positions, then these types of stocks could break out. Earth Creature. That's the person. Hello, Earth Creature. I'd imagine you'd ignore that reminder of your take on SoFi. Absolutely not. Still don't trade SoFi, bro. I mean, here's the thing with SoFi, and I'll just say it one more time, is just remember all of these stocks come off the base now, but it's down so hard from where it was. And that's the problem. Everyone buying it around here. And now you probably may be correct that bases are happening across all stocks. But yes, it doesn't change my opinion on it. There's good money to be made possibly here, but it's also risky money. Unless you have pig status and you believe so much in the company and it's long term and you're prepared to hold it for 10 years or 3 years or whatever it's going to take. It's a totally different strategy. Why does Vixx have more upward wicks than downward wicks? Well, when you say upward wicks, you just mean these ones, yeah? Or you mean upward as in like it's wicking through? I would assume more open up where the VIX kind of flies up and then by the end of the day calms. That should be the way that you get more wicks like that. So more of these wicks. The reason why, fear in the morning, fear during the day, calm when the big money comes in at the end of the day. Apple and Google following the market. Yeah. So both are up quite a lot, 2%. Not too bad. Alric says, I don't trust this morning at all. Fair enough. I mean, again, you have to come from the abundance mindset. If you don't feel comfortable because you don't understand or you don't feel comfortable trading the market at this stage, you don't have to. If you wait for your edge and you wait for the possibility, then that's absolutely fine. That's the way you want to approach it. Anywhere in this area here, we've detailed many points through here. The gap that sits over here on the left-hand side on the real market. So we've got the SPX. If you look, the gap here, there's the 50 fib, there's the 61.8. All of this area here is very feasible. The downward trend. Got to suck in more buys before you move through. No position is a position. Exactly. It can be. So I guess we'll leave it at this today, guys. It looks like another little bit of bullish action here early in the session. Obviously, we're in the hour of power at the moment, half an hour into it. That's the retail traders. You kind of welcome, ideally, the hyper stocks and also things like AMC and GME, especially them to go parabolic right now, similar with those March moves. That would be the best. If you were to go for the bear side here, you'd want to see that, suck in calls, watch maximum pain, watch your call options this week, see if these kind of start to increase near the end of the day. So once this closes, you might get bigger numbers showing up in the calls throughout the next couple of days. If they start to appear, then it kind of strengthens your case that the market will go up and then downish. If you haven't bought positions because you were scared, always have a plan. That's the best way to do things. And if you have a plan, you're not really going to get caught out by most situations. And I think that's really important to do so. Always keep in mind, we have so many gaps left behind on the SPY. And while they don't have to fill, it can strengthen a case for a market pullback later on, should we suck in enough retail. And remember some of the stats we share here on Twitter. That's where we're at in terms of the amount of calls opening. There's just not as much as there was back in March and April. So it makes sense that we need to get more positions open before any negative can occur. Could the bottom be in the Nasdaq? Yeah, I've argued for a little while that's certainly possible. Could yields be spiking to their highest points? Again, that's possible, but we still need to look at it from the perspective of this. Two things. Midterm elections create generally volatility. We haven't seen any of that yet. That's 3 months away, not just today. That's the next couple of months. COVID potentially in China with lockdowns could be a big supply issue. And there are multitudes of other problems. We don't even know whether we've topped inflation yet. So there are a lot of things out there. You got to play the kind of stats, play the averages, use more than just technical analysis in general if you can. If you can bring other aspects, I like to use personally 5 different ways of getting into trades. That can certainly help if they're separate from each other to create a better strategy. Keep replication, keep it going, guys. If you're interested in getting into the draw as well, you can fill that in. I'll draw it as of tomorrow's video. So we'll be giving away one of every one of our courses that we do. And don't double enter, guys. A few of you have already done that. I'll be editing them out. Don't worry about that. I don't want to have double enters because then you get double winners. You sneaky people out there. I see you. Good luck today. And hopefully, whatever happens in the market, it goes in your direction. Thanks so much for taking us over 100K. We've got plenty of fire videos coming for you. If you have feedback, you want me to include it in the videos for the daily show, you think it would be good to cut it down or anything, I'm always interested to take feedback on to make the show the best as possible. You guys like it the way it is before we leave? Do you think it's set up pretty well at the moment? Been kind of refining it. Macro in the middle. Macro at the start. News into macro, into obviously all the key data that you need to look for, into the TA, into the calendar. Oh yeah, I did Tesla. Look, there's definitely a crazed bull case scenario, but at the moment Tesla's stuck between two little zones. We've got that support around 850 and the resistance just underneath 950, sitting about 940. Everything in here is just basically you're looking for it to go to the next zone. Oh, that actually works. Cool. Little bull gap, bear gap kind of indicator. The power hour. That's right. Today's close could be very telling. Could cut crypto. Yeah, but I want to be there for crypto in the like look, you guys all hating on the crypto, but I know I don't talk about it much at the moment because I don't really have too much a strong opinion. But I do think crypto is going to have a renaissance at some point. It probably, for me, it's between the halving period of around 900 days to 1K days. That's when I hope everyone hates crypto the most. Just hate crypto between 900 days and a K day, okay? And then I'll swoop in. I don't really work on crypto the same way others do. I like to buy it when everyone literally hates it, and I'm kind of speculating that might be in the future. Just do an all market stream, yeah. If I lived in the US, maybe. Thank you very much, Crypto AK. Appreciate it. Thanks very much, guys. Appreciate the over 1,000 people that joined us today. I hope you guys win in everything in the market and win the course if you need it or whatever else. And thanks so much for getting us over 100K again. It's pretty damn amazing. And I didn't think it was possible. But, you know, what I'll say is this. If you ever want to get into YouTube, it's a grind. There's no doubt. You cannot miss, okay? I repeat this. If you're trying to start a YouTube, do not ever miss a video. You have to shoot it in like a tropical island if necessary. You just cannot stop. Because that's the thing about it. You just the algo's evil, guys. It just got to keep hammering it, man. You just can't stop. If you want to do it. I just think consistency is the only way to get through on these things nowadays. So good luck. And yeah, you have to have passion for it as well, because there's many days you'll wake up, you're like, I don't want to make a video. Luckily for me, I think every day almost I want to make a video. I do love it, guys. It's the market is cool. It's exciting. There's always a new thing. And I've been doing this a while now. So to be this passionate about it still, I think it's just because it's always you're learning. And if you ever stop learning, I'll say this. I've done that a few times where I thought, I've reached pinnacle. Yeah, that's probably not true. You get your ass kicked and then you've got to reach pinnacle again. You never quite get there. You just, what did I think Dr. Disrespect? You're almost at the tippity top of the mountain, but you're only halfway up. Catch you guys. Bye.